Hello and welcome to Hedgeye NexGen, where we're going to continue to help break down finance into its simplest form and help you build wealth. As always, I'm Ryan Ricci, and we got Ish, as always.
Great to be here.
Great to have you as well. So this episode, maybe a little housekeeping, then we'll get into the episode. This episode, we're doing all things Bitcoin. So we're going to hand it over to Ish, and we're going to just let Bitcoin take us wherever it takes us.
It's going to take us many places today. I think we did an episode before talking about basics of crypto, blockchain, how it all works. This episode, I wanted to focus on, it's not going to be a pitch to buy Bitcoin or anything like that, but I just want to walk through like what's going on with Bitcoin, how it's already happening right now, and why people should pay attention, because Bitcoin isn't the future, it's the present. And I think it's important for people to know about that. It's a pretty niche thing. There's a lot of people who are really deep into it, and then most people might know like very little about it, like the everyday person. It's kind of everything or nothing. There's not a ton of in between on Bitcoin.
That's why we have you.
Yeah, exactly. I'm one of the know almost everything. I definitely do not know everything, but on a relative basis. But yeah, I just want to recap and bring people up to speed with like how Bitcoin is proliferating through everything and a review of the adoption that we've seen so far. And it's only 16 years of existence, because I think it's
maybe introduce how you know Bitcoin and just more background of you, and then get into this.
Yeah, sure. So actually the first time I heard about Bitcoin, it was maybe in 2016 or 2017. I was a lot younger, and I heard about it because my friend, you know the game Rocket League?
Yeah, that's with the cars.
The cars and soccer. Yeah, I really hate that game.
You're good at it?
No, I hate the game.
Oh, okay.
Because I'm really bad at it.
Okay.
But my friend, he got banned from the game for, abusive chat comms, as they call it. And, but he was telling me that he was going to get himself unbanned because he knew a guy online and he was going to pay him in Bitcoin. So that was the first time I heard about it, and it sounded really sketchy. It sounded like what I had known Bitcoin to be, which is some underground dark web currency. I'm like, all right, I'm going to stay away from that. But then, 4 years later, around 2020-ish, that's when I started looking more into it, read about it, read the original Bitcoin white paper, which walks through, what it actually is, and then something clicked.
Okay.
I think a lot of people have a story like that about Bitcoin where, they heard about it. They blew it. Everyone wishes they knew sooner, but it's hard to.
I think I heard about it back when it was like $3,000. I didn't even know. I didn't even give it like 2 seconds of thought about what it was.
Yeah.
It was still so new back then.
Yeah, when it was around 19K is when I really got involved, because I had a friend who was saying Bitcoin's going to 20K, and I had no clue what it was. I looked at it and I was like, hey, it actually is going to 20K, and it made a lot of sense. Blockchain, all the things it brings. Go check out that episode we talked about if you want to see.
And now you are our digital assets crypto analyst.
That's right. Joined Hedgeye about a year and a half ago, and that's what I do here. Try to bring the crypto to the masses.
All right, let's get into this. I'm ready.
All right.
I have nothing on my page. I'm just here to listen.
All right, let's get into it. I got stuff on my page screen here. So Bitcoin, the original cryptocurrency, launched in 2009. It started at a fraction of a cent, $0. It was just an internet commodity that was created. Nobody cared about it. And today it's worth 110,000. I think it's around 106 today, but 110,000 in 16 years. So that's a long way that it's come. And I just wanted to compare. We do have a few slides today. Sorry for the audio only people, but
we'll just grab them for them.
Go to slide 5 just to compare, how Bitcoin compares to other asset classes. So Bitcoin's market cap today is 2 trillion.
Okay.
That means all the Bitcoin in existence combined is worth 2 trillion for the non-financial people out there.
Okay.
And this is maybe a little outdated from 2023, but it shows the value of different asset classes. You have gold. It says 12 trillion there, but I think gold today is around 17 to 20 trillion.
All right. Okay.
Residential real estate, 287 trillion, commercial real estate, 51 trillion, debt securities, 130 trillion, stocks, 99 trillion. Again, Bitcoin is 2 trillion.
So it's like nothing.
It's nothing. But if you then think about it, though, Bitcoin 2 trillion in 16 years, gold 17 trillion in thousands of years. So like that's a lot of money that poured into it in 16 years, going from nothing to something. I think that puts it into scale.
Wow.
And
It's really not that big.
no, it's definitely small, which goes to show like, hey, if it's going somewhere, you're still early.
How big is Apple?
I actually have that.
How big?
It's on the next slide, and I'll beat you to it. Next slide.
Beautiful.
Apple 2 trillion. So
Okay.
Bitcoin just above, and here you can see Bitcoin compared to pretty much all the stocks in the market, and then also silver and gold are on here. Bitcoin's your sixth largest asset, smaller than only 4 other companies, being Nvidia, Microsoft, Apple, and Amazon.
Okay, so for everybody who's listening, what we're looking at right now, it's ranking the top companies, basically equity. So it has the number one is gold at 22 trillion. Nvidia is the next biggest equity at 3.4 trillion. Microsoft at 3.4 trillion, then Apple at 3 trillion, and Amazon at 2.1 trillion, and it's Bitcoin at number 6 at 2.1 trillion. It's bigger than Alphabet, so Google at 2 trillion, and bigger than Silver at 1.8 trillion, bigger than Meta at 1.6 trillion, and bigger than Tesla and so forth.
Yeah.
But wow.
It's gotten huge, and I think a lot of people don't even know what it is. It's just, again, it's all or nothing. So then, like, to take a step back and look at why it got here, why is anyone buying Bitcoin, and how did it come to be worth 2 trillion? Just a quick debriefer on what it is. Go to our slide 2 here. This, for the people watching and who can see the slides, this shows basically Bitcoin's supply model, and this is kind of what gives it value, because there's no cash flows. Like if you buy a stock and it pays dividends, that's the company paying you some of its earnings. Bitcoin doesn't have anything like that. There's no interest you earn on it. It's purely price appreciation because of how the supply is designed. And here you can see the orange line is your total supply of Bitcoin, and the blue line is your annual inflation rate. So that's the amount of new Bitcoins entering the market, new Bitcoins being mined, how much the supply is inflating every year. And so how it works, the annual inflation gets cut in half every 4 years. And as a result, the orange line, the supply, is increasing at an exponentially decreasing rate. So basically the supply increased rapidly in its first 10 years, which we're past now. And we're somewhere near the top of that orange curve, basically right around where it intersects with the blue curve, the blue line. That's around where we are on the supply curve for Bitcoin. Most of it's been mined already, and we're kind of reaching that cap of 21 million. There will only ever be 21 million Bitcoin, and that's what makes it's totally finite in supply. And as a result, people compare it. They call it a digital gold, because what gives gold its value is primarily that it's a finite and scarce asset. It's hard to get more of, very expensive to go and mine. Of course, it also has properties. It's good in electronics. It's a conductor. Bitcoin isn't in the physical world, so it doesn't have anything like that. But its primary value proposition is this finite supply store of value. And if you...
So let's break this down even simpler for people. So do you want to get into just a classical economics model, right? And in order to determine what the price of something is and how that is relates to the supply and demand, maybe break that. Want me to break that down, or
if you want to start, so what you're thinking?
All right. So basically, linear economics, the very basics of how you determine price. If you go to a class in economics, this is how they'll tell you, this is how price is determined. And they'll basically say you make a graph and you put supply and you put demand. And when those two intersect, that's going to be your price. And so essentially it's two factors, supply and demand. So if you increase the amount of supply, what comes from it is you're going to lower the price because there's more supply out there. If you lower the supply, then what's going to happen is effectively price goes up, right? Because it's more scarce.
Yep.
Then on the demand side of things is when you can increase demand and you can lower demand, okay? So what it sounds like what Bitcoin tried to solve in this was they said, okay, we're going to control the supply side of this picture in order to determine our price. And what they did was we are going to have a finite supply, so it's not infinite, it is limited.
Yep.
Okay, so that introduces scarcity. And then we're going to increase the scarcity. They don't increase the scarcity.
Well, they do, yeah, because it becomes scarcer and scarcer as the inflation rate goes down and down and down. So in a way, it's increasing the scarcity.
Yeah, I guess so.
Sort of.
Well, we'll say people can argue about that one, but to stick to the basics here, right? They limited the amount of supply, and they're limiting how much is released into the system every year.
Yep.
Or every 4 years. So it's a mathematical problem that is, we know what the answer is going to be in terms of supply in the future.
Exactly.
And it's never going to be more than that. It's never going to be less than that. It's going to follow this exact path in the future. So they basically fix the supply line so that everybody knows what the supply is, which then basically says, okay, as long as there's a demand, and the demand increases, then the value should go up.
Right.
If the demand stays the same, then I guess you could probably say the price will still go up, but as long as demand doesn't fall, the price won't go down. And so that's basically what the white paper and what Bitcoin is trying to accomplish.
Yeah, exactly. Yeah, as long as there is any demand, there will be a price, right?
Exactly.
And then like the price is, as you were saying, where the supply and demand curves intersect.
Yeah.
That's what determines the price. So yeah, that is how it works. And, you mentioned like they fixed the supply, just to be clear, how all the supply was set, 21 million, the inflation rate, all this is code. Bitcoin is just a digital, it's just code on the internet somewhere. I don't really even know like where. It's a protocol. It's a bunch of people running software on their computer, and that they're all running Bitcoin. That is the existence of Bitcoin. It's millions of computers around the world all running the code that sets this up, that sets up this digital commodity, which has only 21 million to be in existence and is mined and so on.
It's programmatically. It'll never change, right? You can't change that.
Yeah, exactly.
And it's fixed into the system.
Yep.
That's what it is. No meteor is going to come and drop more Bitcoin.
Right. And so gold, is also in a way programmatically, set. It's an element. There's a finite amount on Earth, but then, it just by the universe, right? It's set by the universe, but there is more beyond Earth. Like you said, a meteor.
Or you can artificially create gold.
Can you?
They've started to try to do that.
I know you can do it with diamonds. And at first I was thinking, oh, they'll do it with gold. But then it's like, okay, well, gold's an element. Diamonds are not.
They're trying to crack that code. Let's put it that way.
I mean, it might be possible.
They cracked it with diamonds, right? And then the value of diamonds goes down.
Yeah,
right?
yeah.
So they're trying to do the same for gold.
I don't know if it's possible with an element. It might be, probably is.
I'm not a scientist.
I'm not either. But yeah, that's something they could make more of theoretically. And in that case, then even Bitcoin is scarcer because it's just this code.
Yep.
And nobody can modify it unless all the people running that code decide to, which I don't know why they would, because that would be in their worst interest. So yeah, it's more finite than gold in that sense. You got no Bitcoin meteors coming here anytime soon. And then just like very basically, fundamentally, when you have something that's finite in supply, if you show slide 3 we have here, this is the supply of US dollars, M2. And when you price Bitcoin in US dollars, which are constantly increasing in supply, well, that results in the next slide, supplies to not just Bitcoin, but other assets. When you have assets denominated in an asset that is constantly becoming more and more available, higher supply, and therefore less value, then those assets increase in price. You see the S&P 500, the stock market, Bitcoin, gold futures right there, Case-Shiller, home price index, everything increases in price in nominal terms against the US dollar, which is becoming worth less and less as they create more of it.
So with that, that's a simple ratio, right? So you put the price of it's think of a ratio. You put the price in the numerator, so in the top part of the fraction, over dollars, and what it's saying there is if the denominator, the lower part of the fraction, is going down in value, the overall price and your overall fraction goes up in value.
Exactly.
So basically
super simple.
You keep devaluing the dollar, the price of other goods is going to go up.
Right.
And Bitcoin is one of those.
Bitcoin is one of
gold, S&P, houses.
Yeah, it's not just Bitcoin. It's anything denominated in that. So as long as the supply of that thing is somewhat limited, because if that thing is being devalued at the same rate as the denominator, which is our dollar, then it would stay flat.
Yeah.
But Bitcoin in this scenario,
You mean the government's not going to stop printing dollars anytime soon?
Yeah, I mean, you can ask them. You can talk to Jerome Powell, but I don't think they are. I don't think they have a choice. And
Trump tried and did not work.
Yeah.
So
we've certainly gotten into that on our other episodes for people wondering.
Yeah.
But with this regard, Bitcoin as possibly the most scarce asset of all of these, like more than gold, obviously more than like stocks, which companies can print more. They can issue more equity, more shares of their company. Real estate, theoretically less scarce than Bitcoin. Just build more houses. There's lots of land in the world. Canada is probably like half unpopulated in terms of like land. Build more. So that makes Bitcoin the most scarce asset, and therefore it might increase the most in nominal terms against any of these because it's the hardest to make more of. So yeah, there's your fundamental.
Wait, are you moving up to Canada anytime soon?
Maybe like when climate change hits and like it's a little warmer up there. I think I actually might.
Really?
Probably be a cheap house somewhere. We'll see. Like some.
Well, that's my nuclear fallout plan.
Yeah. Yeah.
Well, actually, maybe not nuclear, because I think nuclear.
Well, it could work because they're not going to nuke the middle of Canada. They're going to nuke right here.
Well, I think first I go to Rhode Island, right? Because like nobody's going to Rhode Island. Let's be real. Well, actually, I might be close to Boston.
I think it's going to get radiation.
Groton's on the list. You're screwed, man.
Groton?
Groton, Connecticut.
Really?
The nuclear submarines. That's one of the top spots for the Russians to nuke.
Oh my God!
Yeah. So don't Rhode Island.
Can they hear you? What our producer just said, Eric, what he just said is, so Groton, Connecticut, which I've hiked a bunch, they have nuclear submarines. So if I go to Rhode Island, Groton's on the path, and I would be nuked because of nuclear submarines. So Connecticut's off the table.
Yeah.
So that'll be a hit point.
I'll be going to the northern part of Alberta or something.
Northern part of Alberta.
Yeah, just middle of nowhere.
Well, because since we're on this,
Yeah.
Nuclear Winter is a great book. I forgot who wrote it, but
Never read it.
She's done a bunch of podcasts, but yeah, well, because like what will ultimately happen? Well, you want to go wherever they're not nuking,
Yeah.
right? And so I guess northern is probably best.
That's what I'm thinking.
What you have to watch out for is if the temperatures start to change, right? And if temperatures start to change, if we get if that puts us into an ice age, you don't want to be up north. You want to be towards the poles.
That's true.
Due to heat.
We got to monitor the climate.
So you got to monitor first. Let's survive the nuclear attacks, and then we worry about where the climate's going. And you want to get closer to the poles.
Yeah,
for that. Yeah. So now we just saved everybody from your nuclear.
Yeah, just a little bonus for the podcast. I don't even know how we got on that, but
you're welcome.
But yeah, back to Bitcoin. Slide 7, comparing Bitcoin to gold. I think this is interesting. So just for anyone who doesn't know, like an ETF, right? Exchange traded fund. So you have your stock market. Bitcoin itself is isolated from the stock market. It's like this internet digital commodity. It's not a stock. It doesn't get listed on the New York Stock Exchange or NASDAQ. So these ETFs, exchange traded fund, well, that's a company that just buys a bunch of Bitcoin into a pool, and then they issue shares of that pool on the stock market. So the ETF is kind of a bridge between the stock market and this internet money, Bitcoin. And Bitcoin ETFs launched in January of 2024, and were one of the most successful ETF launches in history. And since we're comparing it to gold, it's digital gold. If you look at the net flows within the first 240 days of the Bitcoin ETFs versus the gold ETFs, you could see you got over 15 billion into the Bitcoin ETFs in that period, and gold was less than 5 billion. So it's growing really quickly. That's the point.
Okay. Well, so this chart is showing number of days since the launch of both of these.
Yeah.
At different assets.
Right.
Okay. Does Bitcoin have, so this is basically, it's the exchange, right? This is showing the exchange, how much is being exchanged between different people.
No, not like volume. It's like the net inflows.
Okay. So net new money buying.
Yeah. Yeah, exactly.
Buying it. Okay.
Yeah.
Okay.
It's net flows.
Is it on not 8 days since launch, but if you look today, do you know if Bitcoin or gold has higher net inflows?
I mean, cumulative, I'm sure the gold ETF has more money in it.
No, I would say like just as of this point in time.
What do you mean? Like as of today?
Yeah.
Like this shows 15 billion. This shows like this isn't saying there's more money in Bitcoin ETFs in absolute terms than the gold ETFs, but it's just saying within the first 240 days, more money flew into the Bitcoin ETFs in that period than in the gold ETF in its initial 240 days. But today, Bitcoin was January 2024 when its ETF started. The gold was 2005. And I know since 2005, a lot more than 15 billion has flown into. I don't know if you know how much like the cumulative assets of the gold ETF is.
Yeah, I was more wondering.
Bitcoin is 60 billion. There's 60 billion cumulative inflows into.
We can move on. Well, I was more just thinking because it was just different time, like 2005 ETFs versus today ETFs.
That's true.
It's just like a different.
Yeah, but there's tons of ETF launches today, and
highly adopted though.
Yeah, definitely.
Okay.
There's I believe it was one of the most, if not the most successful ETF launches in history. So BlackRock's.
The total market cap of the Bitcoin one is it's just under the total market cap of the major gold one. So it's
it's closed in on it very quickly.
Yeah, closed in.
I mean, in like a year. That's crazy. Yeah. So and so who's issuing these ETFs? Who's behind this bridge between Bitcoin and traditional finance? You got some big names out there. BlackRock, the largest asset manager in the world, 12 trillion. Fidelity, another huge one. Fidelity offers Bitcoin in their 401ks now. JP Morgan and Goldman Sachs, they're not part of the ETF scene, but they offer their clients to now invest in Bitcoin through ETFs. So again, just putting it into scale, how fast this adoption is happening for the people who aren't really paying attention. And more on Bitcoin's relation to the stock market, the S&P 500, which we talk about all the time, and comparisons like where you should put your money. Coinbase just entered the S&P 500 a few weeks ago. That's biggest U.S. crypto exchange, big crypto company. They're not just Bitcoin, but they are big on Bitcoin. It's their largest asset by trading volumes. So now when you buy the S&P 500, you're indirectly buying a little bit of Coinbase, just so you know.
Maybe explain quickly what Coinbase is.
Yeah, so it's a crypto exchange. It's like a brokerage. Like you open up a Fidelity account so you can trade your stocks. Coinbase is the same thing, but so you can trade those cryptocurrencies.
You can buy XRP. You can buy
I shouldn't buy that one.
Bitcoin. Sorry, Pete. Okay, but you can buy Bitcoin, Ethereum, Solana, and all that. You just go to that instead of a Fidelity, and you can basically
Yeah, exactly.
exchange in the marketplace.
It's your Fidelity, your Charles Schwab, but for the crypto universe.
Yep.
And then another index. It's not the S&P 500, but the Nasdaq. I think QQQ tracks the Nasdaq 100.
Yeah.
Right. MicroStrategy is now in the Nasdaq 100. And MicroStrategy, now known as Strategy, for those who don't know, it's the largest. It's the company that holds the largest amount of Bitcoin, 600,000 Bitcoins. That's 3% of all Bitcoin in existence, worth 60 billion. So when you're buying QQQ, you're buying a little bit of Bitcoin basically because you're funding MicroStrategy. So that's at your corporate ETF stock market level. Actually, more on the corporate level. I got a lot of things to highlight here. Public companies today are holding over 700,000 Bitcoin. That number was 0 in 2020. And that's worth another 60, 70 billion right there. And I think public companies, that kind of says something because private companies is one thing. They can just do whatever they want. But when it's public, you got thousands of shareholders. You got to be highly regulatory compliant. So definitely a testament to its legitimacy there.
So what you're saying there is that if I went, it's kind of like an Apple, right? If you go to their balance sheet, or they have cash, right?
Yeah.
And Apple can do whatever they want with cash, right? What typically would happen would be they would hold their cash,
hold the cash,
or maybe you do like a small investment, make a little bit of money off of it, so forth. What you're saying is, you're now seeing people with that cash buy Bitcoin
just to hold on to it,
and just holding the Bitcoin as a source of the cash.
Yeah, exactly. Like they might buy U.S. Treasuries to get like the risk-free rate, free 5% on your money. Some of these corporations they're just buying Bitcoin just to hold it, gain some extra returns on it.
And is that what MicroStrategy is doing?
That's what they do, except in they're doing it on steroids.
Okay,
they do a lot of other stuff that they raise money to buy more Bitcoin over and over again.
Okay, so they're a leveraged Bitcoin.
Exactly. Yeah.
Okay. Any other company, like large companies that have a significant amount other than MicroStrategy?
Yeah. So
like notable ones, or is just MicroStrategy doing this?
There's a few. They hold the most by far.
Yeah.
In terms of public companies, you have a few crypto native companies like your Bitcoin miners. Of course, they're going to hold some, but some well-known ones. Another crypto one, Coinbase, they hold 9.3 thousand Bitcoin. Tesla, 11,500 Bitcoin. Block or Square, it's the Cash App company. They hold 8,500 Bitcoin. GameStop, they recently began their Bitcoin treasury strategy. They now hold 4,700 Bitcoin, and they will continue buying. Semler Scientific, I think, is an interesting one. I don't know if anyone's heard of that, but it's weird because it's like this medical tech company, and about a year ago, they just started buying Bitcoin, and they've accumulated 4,300 Bitcoin, and have kind of that's half their website now is Bitcoin. So for some reason, just like GameStop, they just started buying Bitcoin.
Okay. Cool.
And, when you include private companies into that total of Bitcoin held by companies, it's almost 1.2 million. So that's $132 billion held by those companies. On top of that, I think this is interesting. You have two companies that are launching soon, which were recently announced, called Nakamoto and 21. These are Bitcoin references, but they will be companies exclusively with the purpose of buying more Bitcoin. Just like MicroStrategy, except they do nothing else. Like MicroStrategy has a software business. These companies will just buy Bitcoin, raise capital by selling stock, buy Bitcoin. And 21, for instance, is backed by some very well-known Wall Street banks and investment firms, Cantor Fitzgerald and SoftBank.
So it's literally it's almost like just hedge fund at that point.
Yeah, but it's just nothing but Bitcoin though. So they're not hedging anything. But yeah, it's like a fund basically.
And then I guess their price will track the price of Bitcoin and how well they manage their Bitcoin, I guess.
Yeah, exactly. Yeah, they're calling it a Bitcoin accumulation vehicle. It's kind of crazy. It's like, what is going on? You know?
But I think we can say a lot of companies are starting to adopt.
Yes, yeah. You know, it's the present. It's happening right in front of you. And this is some kind of like weird niche stuff that like a lot of people probably just they're not looking at. They don't know what this is. They don't care. But this is really adding to Bitcoin's proliferation through markets, starting in finance. But this might be everywhere soon, like society. Everyone might be holding a little bit of Bitcoin.
Yeah.
And then beyond just the corporate level, in a way that affects even more people, let's look at like the countries and state level. USA holds 200,000 Bitcoin. Now, that was largely through confiscations. There's a Silk Road, which is like the Silk Road was this dark web exchange, and they used Bitcoin. USA, they shut it down. The government confiscated it. But with Trump, he signed an executive order. Well, they will not be selling any of it. They're going to hold on to it. They haven't said they're going to buy anything yet, but they're building a strategic Bitcoin reserve, as they're calling it.
Hopefully pay off our debt.
They're going to need a lot of Bitcoin. They want to pay off all the debt. But other countries, China holds just under 200,000 as well. I'm not sure how they got it, but probably confiscated. I don't think they're buying any. El Salvador, tiny country, but a couple years ago they announced Bitcoin will be legal tender, and ever since they've been buying one Bitcoin every single day. You can track it online. They literally continue to buy every day, and now they hold over 6,000. Bhutan holds over 13,000 Bitcoin. They have been kind of secretly mining Bitcoin on their own, and it was uncovered by a Forbes investigation, which saw like satellite images of Bitcoin mines, and they tracked it down to the government. So countries stockpiling.
So countries are stockpiling or trying to build their reserves as well. Is there any country that's like made it their official currency yet?
Just El Salvador, but not like they didn't replace. Actually, I think they tried to like replace their native currency. I don't know what it is, but I don't think it worked out too well because it's not really usable as like a day-to-day currency yet.
Okay.
But no, just them.
Just El Salvador.
Yeah, they've adopted it as legal tender.
Argentina is trying to replace their peso with the U.S. dollar. So like the main guy was basically like, stop using the Argentinian peso, start using the dollars.
Yeah,
it's probably there's a lot of countries where their currency that they get paid in goes down like 80%, like in a year. So like imagine you get paid in with something and it goes down by 80% if you just hold on to it. So what most people do is they transfer it for something more stable,
right?
Like U.S. dollars, and then the government's kind of like, we have a real problem. Let's just get rid of our currency altogether.
Yeah. And if we could actually show those slides, slide 8 with these 4 charts, as you're saying, like their currencies in countries like Argentina, massively devalued, and the dollar is the reserve currency, so most people are probably looking at the price of Bitcoin in dollars. But if you look at it in terms of Argentine pesos or other countries that are experiencing similar hyperinflation, Turkey, Nigeria, you see like how different the price chart looks, just basically vertical for Argentina.
Yeah.
Now that's Bitcoin. Generally, if you show the next slide, this shows like the crypto adoption index of like which countries are adopting crypto. And you see Nigeria and Argentina in this top 15 or so. That said, it's not just Bitcoin. Like a lot of them are moving to stable coins. If you look at the analytics of cryptocurrencies most received by residents of these countries, they're exchanged with like the Turkish lira. It's a lot of stable coins, which is like a cryptocurrency that tracks the US dollar. So they're basically piling money into the dollar via stable coins instead of Bitcoin. So they're not necessarily looking to Bitcoin yet to replace the Argentine peso. most people at this time are looking towards the dollar because it's more stable.
So what they're doing is more adopting like the crypto architecture and ideas, which is connected to Bitcoin.
Yeah.
So like I think like a stable coin for everybody, right, is something that literally just tries to hold a value of 1 for the rest of the time.
Yep.
Right. Never go above 1, below 1, just be at 1. So like any time you want to go to this, you give $1, you get $1 back.
Right.
Right. And so that's the overall.
But the difference is like you get like if I go to Coinbase, I deposit cash from my bank, and then I put $100 cash from my bank to Coinbase. Then I buy 100 USDC. That's a stable
coin.
Then I have $100 worth of USDC, and it will stay there. It's not going to go up or not going to go down. It's not going to increase in price like Bitcoin. Yeah. So what's the point of that? Well, now I have a cryptocurrency that's stable. It's worth $1. And because it's a cryptocurrency that it's digital money, well, I can send it across borders easily, and I can do other stuff with it.
And then you can get your currency back from that as well.
Yeah.
So when you need it, so basically, why are these countries doing that? Well, just like we said, if you're getting paid in something that goes down by 50% a year, the second you get it, you have to put it into something that's not going to go down.
Yeah, you're going to want to do that.
Because if you hold it, well, it's worth less.
You just lost all your income.
Right,
by holding on
your income.
Yeah.
Your income went down by 50%, where if you put it into something that's stable and goes across borders,
right,
you're not losing 50% of your income. You're 1 for 1 for the
you save your money.
Save money.
And the reason people are looking in countries like Turkey and Argentina, I didn't put the charts in this, unfortunately, but some great ones. The reason they're using crypto to do exactly what you're saying is because in those countries, it's not always that easy to get dollars. Like what you get paid in your Argentine pesos, you don't want it to lose value. So what are you going to do? Like go to your local like Western Union or like currency exchange and swap it like every time you get your paycheck? I mean, that's a lot of work. You're going to pay a lot in fees. So crypto is an easier way to access dollars right now. Now, what I think is eventually as Bitcoin becomes more adopted via all the things we're showing where companies are holding it, governments are holding it, I think it'll become less volatile over time. And people will see that it's a better store of value than even the dollar, which we showed in the M2 chart. That's also being inflated away, just like the Argentine peso. So I think right now the stable coins are like a middle ground. It's intermediate stage, but it's just
because people don't want to. Well, they're probably really worried with Bitcoin is the large drawdowns, right?
Yeah.
Because while Bitcoin does go up a lot, what goes up must come down. And so it can have an 80% crash sometimes. Now, has it come up past and returned its value past the 80% crash? Yes. It's gone up in value, but you're kind of saying is as it's adopted more, you should see these crashes become less and less over time.
Yeah, exactly.
And so, yeah, I think that's probably why they're going to something that's a 1 for 1 transfer, because with your paycheck, you don't want any fluctuation.
Yeah, if you need like money the next week to buy groceries, you can't risk it going down 80%.
Right, and then not being able to buy groceries for your family. That wouldn't be good.
No. So that's why, right now the dollar's a lot more stable than Bitcoin.
Yeah, but it's also used a lot more by more countries.
Yeah, it's more commonplace. And yeah, just one more note on that topic of sovereign adoption that could add to the stability of Bitcoin and makes our case for that it's the present. At the state level, we now have 2 U.S. states that have established your strategic Bitcoin reserves, New Hampshire and Arizona. New Hampshire, they passed a bill that will allow their government to allocate up to 5% of state funds to digital assets and precious metals, so it won't all be Bitcoin. Arizona is a little different. They're not necessarily saying they're going to buy, but they said any abandoned property, like if someone has Bitcoin on an exchange wallet and it just sits there for some amount of time, I think the government can collect it. I'm really oversimplifying the law, so don't even question me on that. But I believe that's generally how abandoned property works. Like I have a wallet with this company called Backed. It's some crypto company.
Okay.
They went to shit. I don't know if I can swear on here, but
You can do whatever the hell you want.
the company went to shit, and I got an email. I had like $5 in there, but I got an email. It was saying like your account's been inactive, and we will have the rights to your assets soon if you don't sign in. So that's I think how it would work.
That's weird.
Yeah.
So, okay, probably scaring people with that one. So
Just be active with your accounts.
well, yeah, make sure you know where your digital assets are.
Yeah.
And make sure that they're a good source or holder of the digital assets. Right. So, okay, we'll give a good example here. So FTX. Okay, so right is one that most people probably know. FTX was a Ponzi. You call that a Ponzi scheme?
I wouldn't call it a Ponzi scheme.
Did they say that they were an exchange?
Yeah, it was just like Coinbase, except
Right.
very poorly managed.
So basically, we have this nice guy called Sam Bankman-Fried. Basically, you would put your money in, and then you would maybe have an account of Bitcoin. But really, underneath that, you didn't actually have Bitcoin. The company was taking your crypto that you were allegedly buying and going and buying other things elsewhere based on the genius of Sam Bankman-Fried, that he can manage Bitcoin better than anybody. And so he went and he bought a bunch of shit, right?
Yep.
And basically the Bitcoin you thought you had, you didn't actually have. He was out there buying something else. Bitcoin crashes about 80%, and the value of everything goes down. People try to then pull out their Bitcoin and say, I want cash, I want dollars now. He's like, I don't have anything for you, because everything I had went down way more than Bitcoin went down. And so, yeah, basically that's a fraud.
Yeah.
And so that's what happened with FTX. Okay. And so I think the big thing here is make sure the exchange. Now, by the way, this could happen with a Fidelity, so to speak, right? It's just that Fidelity's been operating for a lot longer than crypto. And so then they're a little bit more trusted, right? So like, yeah, Fidelity could theoretically, you could be buying a stock and then behind your back not be actually have that stock and so forth, right? But that doesn't happen with Fidelity because we all trust Fidelity. We all trust Charles Schwab and all this.
It's a lot less likely.
It's a lot less likely, right? It's still possible, but a lot less likely. So crypto's newer. So basically just be a little bit more careful where you're putting your money and make sure it's a reputable company so that, and not an FTX.
Yeah.
And so that wherever you're putting your money is safer. And I would think Coinbase is one of the safest, or
it's funny you mentioned that. I like Coinbase. I think it's the most used US exchange, and they're a public company, so kind of very vetted, complying with the law. But that said, they had a couple of data breaches very recently that scared a lot of people. Like I think some hackers bribed customer service representatives of Coinbase in India, 20 million or something like that. Now, they bribed them, they paid them off to give the hackers personal information about customers, like their addresses, phone numbers, crypto balances, transaction history. They had that data. Then they said to Coinbase, give us 20 million or we're going to release it to the public. And Coinbase said, well, we can give you 20 million, but you're probably still going to do that anyways. So they didn't pay them the ransom. But the point is, it's a data breach. It's not people losing their money, but sensitive information out there. So there's a lot of risks, like anywhere. Yeah. There are other reputable.
Like anywhere. I mean, there's data breaches all the time with credit cards.
Yeah, it's true. That's kind of just internet risks at this point.
Pretty much. I would more be worried about if they were able to get the Bitcoin fund.
Yes. When you're using one of these centralized company exchanges, relatively low risk of that. There have been hacks, but Coinbase nothing huge, and they'll cover small amounts. I think up to 250K or something.
Okay, so that 250K is the FDIC thing.
Well, it's not FDIC insured. Let me check that. Actually,
Not the same.
It is, but Coinbase isn't FDIC insured.
Okay.
So
Maybe they're trying to make their own insurance. You look that up.
it might be
And
125.
so for everybody that's new to buying Bitcoin or so forth, so that's the exchange, by the way. So you can go on Coinbase and you can buy Bitcoin. Now, here's the thing with that. You don't really, the exchange has the Bitcoin, right? And
Yep.
you don't. So there is something though called like self-custody. This is where a lot of people, a lot of real Bitcoin enthusiasts end up going, right? There's something called a wallet, and you can actually transfer like your stuff to this like wallet. And like if you don't have, like, you get keys, you get credentials for this wallet. But basically, if you lose the credentials for the wallet, say goodbye to your Bitcoin, and you don't have it anymore. It's gone with wherever your credentials are.
Yeah,
essentially.
So risks there as well, for sure.
There's definitely a lot of risks there, and so there's different ways to have it, but you can use something like Coinbase to buy Bitcoin and then transfer that Bitcoin to a wallet.
Yep.
That's literally called the
Crypto wallet.
Crypto wallet. Well, Coinbase has a wallet.
They have their own wallet too. Yeah.
Yeah.
A self-custodial wallet.
Yeah. So that's what self-custody is in the crypto world. And so just think of it like, a thumb drive almost. Like, let's say I bought Apple. Think of it as like a thumb drive of Apple stock. And
yeah. It's kind of like, if you have a Fidelity account and you have Apple stock there, you have a right, and they will honor your request. If you ask them to send me my Apple stocks, what does that mean? They're going to send you paper certificates.
Okay.
And now you actually have the stock. They're not holding it on your behalf anymore.
Yeah.
And so it's the same thing with crypto, except it's all digital. If you send it to your wallet and you have the key to that wallet, whoever has the key has the actual ownership of the cryptocurrencies.
Okay.
And when you have like a Coinbase account, they're holding it on your behalf. They have the keys to your wallet. But if you send it from your Coinbase account to your own wallet, then you got it.
Yeah. So sounds very similar to, I didn't know that you can actually get the paper certificate of the stock.
I believe they have to honor that. So
I would think so, but it just kind of shows you're already doing with crypto what we do with stocks without even knowing.
Exactly. It's the same thing, just different asset.
Yeah. And so do you keep all your stuff in a wallet, or?
I have a lot on exchanges. But
exchanges.
But yeah, interestingly, Coinbase, they're not an FDIC insured bank, but they have been established in a manner that allows users to make a pass-through FDIC claim up to $250K. So same difference, I guess. But yeah, however you decide to buy your crypto, the point is, Bitcoin specifically, like, this is happening as we reviewed, hopefully gave people like a really basic understanding of something that's happening maybe behind the scenes to them. It's not apparent in their everyday life. And if we want to show this little YouTube clip, actually, that I thought was interesting, because it kind of mirrors the early days of the internet, which is something that was happening, and most people probably didn't know, but there's a lot of big companies behind the scenes that were working on it, and banks investing in them. And so let's do we have that clip?
I wasn't prepared to translate that as I was doing that little tease.
Oh, that's
that little mark with the A and then the ring around it.
At.
See, that's what I said.
Mm-hmm.
Kay said she thought it was about.
Yeah. Oh.
But I'd never heard
around.
I'd never heard it said. I'd always seen the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
I heard be around there about in the lunchroom.
See, there it is. Violence at NBC. GE com. I mean,
well, Allison should know.
What is internet anyway?
Internet is that massive computer network, the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
No, she can't say anything in 10 seconds or less.
So, like, if you're even watching this podcast, you already have an advantage over all the people who aren't paying attention at all. And you're ahead of that curve. Look into it. I'm not saying buy Bitcoin, but at least know about it, because it might be a part of your life in the future.
Yeah, and you can make it a part of your investments as well. So let's let's bring it back to how brag a little or into this. So, right, we always talk about like investing, right? And investing compounds your money, right? And I've always just used S&P 500 because like that's just the overall market. It's a very commonly nobody's going to argue with me if I say the S&P 500. So I say the S&P 500 to keep the people calm, right? So, but we know the rate of return of the S&P 500. It's 10%. And when we put our money in, we can expect about 10% every year, and it compounds and it grows, right? What we've tried to tell people a lot on this show is compound your money. Save your money, compound your money. So something with Bitcoin, so where does this all add or come into play is Bitcoin also can go up in value. It can also go down in value, but overall, we would believe it over time, it will go up in value over the very long run, over all the things we just said. Okay. Now, so what is this due to the compounding number? An example, if you add a little bit of Bitcoin, maybe instead of 10% return, you get something like a 15% return.
Yep.
Obviously, adjust it to how it makes sense for you. Okay. But right. So that's basically, it could increase that compounding number, and
assuming it goes up.
It's
higher return, but also higher risk.
Higher risk, right? So for crypto specifically, it's one of the highest risk assets. So it can go up 100% one year, then be down 80% the next, then up 200 the next year, then down 90% the next year. It is one of the biggest roller coasters of roller coasters. So 100%. Be aware of that if you are investing in crypto, and just manage it properly. But just know what it is, and just know it's very high in volatility. It can go up a lot. It can also go down a lot. So we do try at Hedgeye to help people manage that risk, but that is overall what it is.
That's right. And it's becoming increasingly common. So don't ignore it. And that's all
I find it really cool. So by the way, that was all that's just like Bitcoin, right? And that it has that. But so like Solana, XRP, which Ish hates, Polymesh she loves. But, right? It's not an endorsement for either one of them.
No endorsements.
But either way, Ethereum, they're all different than Bitcoin.
Yeah.
Bitcoin is what we just talked about with the finite supply. Probably why it has the most amount.
It's the only one like that.
Okay, so the rest of these coins that you see are not like that. Think of them almost like a small cap company that is just different. It has another white paper that's not the same as the Bitcoin white paper.
They're not even trying to do the same thing.
Right.
They don't have finite supply. It's different completely.
It's on the blockchain, on the internet, but it's not the same thing. It's like going to a different URL. Right?
Yeah.
A different URL has a different page. They're not equal. They're not trying to do the same thing. So
that's right.
Make sure to know that. And then let's see what else. Maybe we could do a whole other podcast on this other one. But I personally love with the crypto world is the different uses of it that they try to take out middlemen.
Yeah.
It's
all about decentralization.
Yeah. So okay, decentralization for people is like you just have a bunch of different actors all working towards one goal, and so it's not one centralized thing that you have to go through to accomplish a goal. It's a whole bunch of different people anywhere in the world. It could be Venezuela, Brazil, and you guys are all just working together towards a similar goal or just transacting amongst each other. It's person to person.
You're right. It's like if I wanted to send you money through Venmo, I use Venmo. I go in the Venmo app, send Richie like $5. It doesn't go straight to you. It goes to Venmo, and on their behalf, they send it to you. They're managing our accounts. Cryptocurrency cuts Venmo out, and I can send it from my wallet to your wallet directly.
Exactly. And no middleman.
No middleman.
At all. Which is, you can start to imagine where are all the places where there's a transaction and we have a middleman.
Everywhere else.
It's everywhere. Mortgages, right?
Yep.
Mortgages have a middleman. All banks have a middleman. You just mentioned Venmo has a middleman.
And most payment providers, credit cards, like you said, banks. It's like everything else.
Literally everything has a middleman. So, like, one of the cool spots I personally like is all the different areas are trying to cut out middlemen
Using blockchain.
using blockchain, because blockchain is just a person to person, right? And then also think what comes when you have less middlemen, less fees.
Less fees, faster, in a way, less risk.
Yeah.
Because it's, you're cutting out like that middleman, like less counterparty risk.
Right, and you can also get more unique things. So one of the ones, everybody, that I've been dabbling with, it's called Morpho. So it's called Morpho, and so Morpho is a lending thing. So basically, people can have Bitcoin and they can go lend out their Bitcoin to another person.
Yep.
And there's basically like Bitcoin's your collateral, and you get a rate of return for lending it out, and then the other person also gets another rate of return.
The person borrowing it, they pay you that rate of return, right?
Yes.
Yeah.
Right. So basically, it's just a big debt with Bitcoin as the collateral.
Right.
And the cool part about that is, think about what happened during the financial crisis or the housing crisis, right? Basically, a bunch of people were having mortgages and they were starting to default on their mortgage. What was their collateral? What's the house? Okay, so a bunch of people were getting houses that shouldn't have been getting houses. They were putting their house as collateral. They stopped being able to make a payment, and then the bank comes in, or it was the government. The U.S. government comes in and basically says, we'll take all these houses.
Take your collateral.
Well, take your collateral.
You can't pay for it.
Because you can't pay for it. So since you can't pay for this loan anymore, we'll take your asset. It's just the house. And so that basically one of the U.S. government's best investments ever was investing during the housing crisis.
Because they got the houses at a discount.
They basically got all these, they got the mortgages at a massive discount and so forth. So now let's go back to the crypto example. If a bunch of people lending out money using Bitcoin, right, or in collateral, some of them are not going to be able to meet their financial obligations.
Right.
So instead of the government taking their Bitcoin, a person like us
you can become
I can go and get their Bitcoin, right? And so that's where like this is it's all starting to happen. It's in the very beginning stages of people are able to do that, and you don't need that centralized government to do it. You have me. I could go in, I could write the code, and I can get people's Bitcoin
at a discount.
All
happening through code.
And it's all happening through code. So I think that to me is one of the coolest things about the crypto universe is just taking out middlemen.
Yeah, and that's what blockchain brings. We'll go deeper into all that DeFi, the crazy world of DeFi.
Yeah, we can do that in another episode. We'll go because I'm sure there's more. But anybody who's listened to us knows I hate the banks.
Yeah,
right. Because why are we going to pay the bank our interest?
Making money, they're compounding.
Exactly. Why are we going to let them compound when we should compound? So anything that takes out those middlemen, I'm here for.
It's a perfect match.
It is the perfect match. You have anything else on the Bitcoins?
That's all I got on the one and only Bitcoin.
The one and only Bitcoin. So that's all we have then for today. If you like it, if you want us to go into anything about crypto, we got Ish here, who is the crypto man himself, the guru. So you ask us, we'll do episodes on it. I also love interesting things. Crypto is one of those.
Oh yeah.
I'm getting more into it with all the I do a lot of coding, and so I've been getting into what is it and what's actually behind it and the code behind it. It's wild.
It's it's a maze.
But anyway, make sure to tell us what you want to hear next. We'll do it. And so we'll be back in 2 weeks. And essentially, if you want to listen to us, we are anywhere where podcasts are. I had one of my friends say, I thought this was behind a paywall this whole time. You idiot.
It's free. Free knowledge.
This is literally free content. Okay? Free. 100% free. We have all of our episodes are out there. Literally go search on Spotify, on Apple,
HedgeyeTV.com.
HedgeyeTV.com. If you search NexGen, there's a whole series on it. Anyway, this is free content. Literally, he was watching all the little shorts. He was like, oh,
I wish you could see the full
I
thing.
wish I could see the full thing. I'm like, here it is. He was like, I thought this was behind a paywall the whole time.
Wow.
Gosh. So if you're one of those people, well, welcome. You're like my friends. I love my friends. I love you, I guess. And so please watch us, download us, like us, go to our Twitters. I'm Hedgeye AI. He's
HE Digital Assets.
HE Digital Assets. And if you're trying to search for us, it's Hedgeye Podcast. And in that is Hedgeye NexGen. And that's us. And it's free. So go and watch it. And yeah, we'll be back at this at another time, 2 weeks. So look out for that.